Hello, my name is Julien Dillon. I'm a financial analyst and the founder of LPE Research, an independent equity research firm exclusively dedicated to asset managers and specialized on French small caps. Last week, we have been working on the company SES-imagotag, and today I'm going to present our first analysis on this stock. Before I begin, I would like to remind you that this video is not an investment advice, but only an opinion. We do not do any business with SES-imagotag and do not hold any long or short position in its shares. Having said that, let's get started. Founded in the early 90s, SES-imagotag is the world leading provider of electronic shelf labeling systems and solutions for the retail industries. The company equipped more than 22,000 shops worldwide and has installed more than 230 million electronic labels. The group does not manufacture its own labels, but sources most of them from the Chinese group BOE Technologies, its majority shareholder since 2017. Otherwise, new electronic labels equipment accounts for almost two-thirds of the sales, and labels renewals for almost a quarter of sales. To enable its customer to manage these labels, the group has also developed an IoT cloud platform and high added value services. These highly profitable and fast-growing SaaS software activities account for 13% of sales in 2020. Finally, in 2020, the group achieved more than 70% of its sales in Europe. SES-imagotag is a fast-growing group. Over the last 10 years, the group has multiplied its turnover by 6.5 times, mainly through organic growth. This strong growth is primarily due to the market. The electronic labels, which make it possible to adjust product price very quickly and reduce staffing requirements, is becoming a must for all major retailers. But this growth is also due to SES-imagotag's own performance within its industry. In 2006, SES-imagotag turnover was 35% lower than its main competitors, the Swedish Pricer. Today, SES-imagotag is twice as large as Pricer. To outperform its competitors, SES-imagotag first became Europeanized and then globalized. In 2006, more than 85% of company sales were made in France. 80% of sales are now made internationally. The group has also invested heavily in innovations. But above all, SES-imagotag has become the world leader thanks to an aggressive strategy of volume and market share capture through price. This aggressive strategy of volume and price-driven market share gains is easily visible when looking at the gross margin. Until the end of 2000, SES-imagotag had a gross margin of 60%. The group was very profitable and generated comfortable free cash flow. Over the last 10 years, the company growth accelerated, but its gross margins collapsed due to the effect of falling prices. Today, it is barely around 25%. As a result, the group operating result also fell. In 2009, SES-imagotag had a higher operating margin of 30%. In 2019, the company recorded almost 15 million euro of operating losses. Logically, these losses combined with growth have weighed on working capital and cash flow. Over the last 5 years, SES-imagotag has accumulated 75 million of negative free cash flow. Finally, it should be noted that Pricer, which didn't follow this strategy of aggressive growth through prices, has always remained profitable. However, it is no longer the leader. SES-imagotag was looking for leadership, and now that it has it, the company intends to become profitable again. And indeed, the company is making profit again. SES-imagotag reported a net profit of 2.5 million euro in the second half of last year, and 1.3 million euro in the first half of this year. More importantly, the group managed to stabilize and even improve its gross margin in a context of still very strong sales growth. Several factors explain this improvement. Firstly, SES-imagotag benefits from its industrial partnership with BOE Technology. The Chinese group, which has built a gigantic electronic label factory, is able to supply labels at a very competitive price. Secondly, the company is benefiting from the growth of its high-margin software and services business. This activity, which represents 10% of sales in 2019, should reach 15% of sales this year. Last but not least, the market is very strong, and in a context of pressure on components, customers are less focused on the price of electronic labels than their availability. Now, beyond the recent turnover in profitability, SES-imagotag can now focusing on capitalizing on its leadership to grow and generate profit again. The management has set itself the objective to achieve 800 million euro of sales and EBITDA margin of 15% by 2023. This is an ambitious target, but one that we believe is achievable. In terms of sales, SES-imagotag should first and all benefit from the acceleration of the digitalization of retailers, which require to switch to electronic labels. While this transformation is well underway in Europe, it has just only begun in the United States. The market is taking off there, and SES-imagotag, as a leader, is the first to benefit. Secondly, in Europe, the group, which has a large installed base of shops, should benefit from the renewal and replenishment of labels. Finally, the software and service business should continue to grow at a very high rate thanks to the continued expansion of the customer base, but also to the development of new digital SaaS marketing and management support services. In terms of margins, assuming that the gross margin remain in line with previous half years, the leverage effect of sales growth should lead to a strong improvement in profit. In this context, could not SES-imagotag share price continue to rise? The share price has doubled since the beginning of the year. But within 2 years, the company expects to double its turnover. And we expect the group to multiply its EBITDA by more than 5 times compared to 2020. Above all, the company has finally entered a phase where it can capitalize on its market leadership. Its business model is moving from a hardware sales model to a recurring SaaS software sales model. Sales of labels renewal and SaaS software should represent nearly a third of group revenue within 3 years. In fact, if we forget the EV on EBITDA and PE multiples, which may not be significant given the still too recent turnaround of the company, but value the group on revenue multiples, it is possible to imagine that stock approaching 100 euro. Thus, by valuing 1.2 times the turnover of electronic labels new sales activity, the group historically lowest multiples, then 2 times the turnover of labels renewal, recurrent by definition, and then 10 times the turnover of software activity, which is the sector multiples, the group enterprise value could exceed 1.5 billion euro and approach 100 euro per share. But there are risks, and these risks must be analyzed and taken into account. The first risk concerns the availability of components for electronic labels. The shortage, combined with supply problems linked to the pandemics, has already weighed on sales in the last 2 quarters. Above all, this situation could lead to a new price-cost squeeze phenomenon in the medium term. While the economic context could be less favorable in 2022, major retailers could become more attentive to prices, while at the same time, SES-imagotag could face an increase in its electronic labels purchasing costs. In fact, beyond the economic situation, there is a risk that BOE technology will, one day, decide to use its position as a majority shareholder to impose its condition of delivery of electronic labels and to take over the bulk of the added value. Last but not least, market growth could slow down considerably in the next 3 to 4 years. In Europe in particular, the digital transition should be completed within the 2 or 3 years, and all distributors equipped with electronic labels. In the region, SES-imagotag has taken 15 years to equip nearly 20,000 shops. It should equip 8,000 more in the next 3 years. After that, the market should become mainly a replacement market. So, once you take all the risk into account, is it still reasonable to imagine SES-imagotag at 100 euros? To answer this question, I will quote that Warren Buffett learned from Benjamin Graham, his mentor and father of fundamental financial analysis. Price is what you pay, value is what you get. Even if it is interesting to apply turnover multiples to SES-imagotag to see how far the market could push the share up, you have to perform a reasonable DCF if you want to get a true idea of the fundamental value of the group. First of all, after the strong revenue growth expecting over the next 3 to 4 years, a decline in sales of new electronic labels due to the maturing of the European and North American markets should be factored into the model. The group sales should continue to grow thanks to sales in emerging countries, the replenishment of old shop, and SaaS services, but at a much slower pace than today. Concerning free cash flow, they are expected to remain negative for the next 3 years, but to turn positive thereafter as the group profitability gradually improves and at the same time working capital increase less than as sales slow. In view of the significant underlying risk, we discount this flow at 8%. Finally, for the terminal value, we use an EV on EBITDA multiple of 10 times in 2030. This gives us an interesting value of around €70, close to the current share price. That is for today. I hope you have enjoyed this video. And if you would like to know more about our opinion, you can contact us and order our first analysis pack that include our presentation, our forecast and valuation model, our stock reputation measurement, and allow you to discuss with me. In the meantime, do not hesitate to subscribe to our YouTube channel or to visit our website at lperesearch.com. Thank you very much and see you soon!